Today, we are having a conversation with Jason Morris, Chief Investment Officer at Sygnus Capital. We'll be talking a little bit about the company, trying to understand, who is Sygnus Credit Investments, what do they do, what's in their portfolio of companies, etc. We'll talk about, of course, the preference share offer that is out right now. The prospectus came out last week and the offer is actually open today. So we're going to answer some of those questions, try to learn a little bit more about the offer, and would have done a prospectus review just last week. So if you missed that video, I'm going to link it in the description of this one. So be sure to check that out. It's very important to watch the entire prospectus review, ask any questions that you may have so you can make an informed investment decision. So this video is really to tie up any questions that we may have from that. Then, of course, we'll talk about, as we normally do, the future of the company, where is Sygnus headed, and see what else we can learn about their strategy, approach to growing their business, and some other things that we may have to talk about. So it's going to be another great episode. Be sure to share this video. I know there are persons who may be interested in learning more about the preference share offer. So this is an episode that you definitely want to catch as well. So let's just get started.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
All right. So let me play a brief video that I have about the offer as well. So as it shows in the video, offer opens today. So you want to be sure to check out that prospectus review, watch this interview through to the end, get all of your questions answered. And then, of course, we would have covered in that video how to apply and all of the things that you need to know. So at this time, I think is a great segue to inviting Jason to join us. Hi, Jason. Welcome.
Thank you for having me. I'm glad to be here.
It's our pleasure to have you. I know that, as I said to you, before we started this, I'm a big fan of Sygnus and what you do as a company. You've kind of set the bar in terms of your earnings calls, for example. You have them consistently. It's always very detailed in terms of the information that you share. And so I just love how you have run the company. So it's very good to talk to you.
Thanks, man. Thanks. Everything for the shareholders, Yeah.
Yes. All right. So let's just learn a little bit about you before we get into the questions. Tell us a little bit about you, your background, and what went into the vision, behind starting Sygnus or being one of the co-founders.
Yeah. So first, I have to say that you have Sygnus Capital, which is the manager for a number of different investment management firms on our alternative investment management platform. So we have Sygnus Credit Investments, which does private credit, and I'll probably walk through that a little bit. You have Sygnus Real Estate Finance that does real estate investing, and then Sygnus Deneb Investments that does private equity investment. So when you say Sygnus, right, I know that many times people are a bit confused, but these are different companies doing different things. So Sygnus itself, was founded in 2016. Four of us really, and that idea came about because we used to work at what I want to call it traditional financial institutions, and we saw that there was a gap in the market, and so we decided that we wanted to solve this gap, which was basically to take capital that we saw was, in a lot of government debt and in other assets that we think was not being put to its most optimal use, and channel this into medium-sized companies across the Caribbean region and into real estate assets in a manner that would help economies to grow faster by unlocking capital for those who don't have access to the capital, and at the same time to produce and give access to alternative investments for investors. So effectively create a virtuous circle, a virtuous cycle. So SCI, or Sygnus Credit Investments, was the first company that we started in 2017. And so SCI, has been around for, you could say, 6.5 years. Its 7th anniversary is going to come up in July 2024. And so SCI, what it does, it's, we take the capital that investors provide us with, and we look for companies with revenues of anywhere between 5 to 25 million US or the equivalent in local currency right across the Caribbean region. And we try to provide those companies with this investment capital in a specific way. How? By deploying the capital in using debt. So we're not lending the money, right? What we do is we basically use very innovative ways to do an investment, which is a debt investment, which means that in most instances there's collateral underlying our investment, and there's a higher probability that we will get back our capital, and we either get interest or dividends over the life of the investment, and we manage how that structure, the negotiation of it with these companies, the payback period, etc. And out of all of that pool of capital, we then return dividend distributions to the ordinary shareholders. And in this case, where we have preference shareholders, we also give them dividend, but this dividend is fixed. So that's kind of the 1,000-foot lay of the land, a background, so to speak.
Okay, great. Thank you for that context. So it's important for persons to understand that though you manage multiple companies, it's SCI that is the one that's having this preferential offer. We'll get to that a little bit later, but in terms of the scope of SCI and how you've grown since listing, can you talk to us a little bit about that? Has anything changed in terms of the vision that you started out with, or is it just more of the same?
Okay, it's a good question, right? So when we started SCI, we felt that there's a huge need in the market, and we started with 16 million US dollars back in 2017 via a private placement, and then we went to market IPO in 2018, and then I think in 2021 we had an additional public offering. So the company has moved from 16 million that it was started with those shareholders who put their money on the line when it was just an idea and paper, and now collectively SCI's total investment portfolio is about 203 million US dollars, and this of course includes an acquisition that we did last year February, where SCI would have spent 22.5 million US to acquire the majority shares of a private credit company in Puerto Rico called Acquisition Financial Corporation. So this was effectively our first acquisition. Well, it's gonna be the first of many acquisitions that SCI would have done, and that company, the acquisition of that firm, basically adds tremendous diversification to Sygnus Credit Investments, because before we did that acquisition, we would have been deploying capital across English and Dutch speaking Caribbean territories, 8 to 10 different Caribbean territories. But with the addition of Puerto Rico, this has effectively set SCI up for great things in the future. One, because we would have basically acquired a fantastic management team in Puerto Rico. They actually have 20 years worth of experience. They celebrated their 20th anniversary earlier this month. and they would have deployed, over $600 million over that 20-year period, and they have lost only less than 0.5% of the capital that they have deployed. So it's a fantastic team and a fantastic opportunity for SCI to acquire a company that's in $100 billion economy. In fact, Puerto Rico is actually a US territory. So in terms of growth, last year, ended June 2023, so last financial year, still in 2023, the company would have made a record profit of, I think, 5.3 million US. So that's the highest profit would have made. Would have also paid out a record dividend in October, just about a month ago, of 1.6 million US, which was an interim dividend. And SCI pays dividends semi-annually. So, the trajectory for SCI, I would have on multiple earnings calls say that what SCI is trying to do at the moment is to basically be involved in deploying capital or investing more than $1 billion US over the next 3 to 4 years across the Caribbean region, in the middle market companies, because we think that the market opportunity for a private credit investment vehicle like SCI is huge. And we are just at the tip of the iceberg in terms of what the Puerto Rico business can do for SCI, not just in terms of diversification, but also expansion of the credit portfolio and in terms of also entering into new markets. Of course, the first job at hand is just to ensure that the Puerto Rico business becomes the most dominant player in Puerto Rico, which is something we are working on. We actually have one of our co-founders, Dr. Ike Johnson. He's actually living in Puerto Rico, has been living in Puerto Rico for nearly a year now since the acquisition, just to ensure that we get a very good understanding of the market ourselves, and help the team there to grow and expand the company rapidly.
All right, good stuff. So I'm curious here. So you mentioned the strategy behind the acquisition of AFS, but does that mean, and you mentioned they're part of the US territory, does that mean you're looking to possibly expand to the US? Is that something that you're looking at, or is it more of countries that maybe within the Spanish speaking realm that you're looking to? Is it one or the other, or is it both?
Good question. So I don't like to give predictions and speak too much about the future when things aren't concrete, right? What I would say to that is clearly the possibility exists and the route is there, where it becomes much easier if in the future we chose to go the route of entering mainland US. The route is there. It's not something that we have put a lot of thought into at this moment. At this moment, our focus is really to maximize or optimize the business in Puerto Rico itself. Obviously, beyond that, over say the next 2 to 3 years, we will obviously look at the opportunity to expand into other Spanish-speaking territories within Caribbean and possibly Latin America. And it all depends. If the right opportunity arises, then obviously we take it. But at this present moment, we're just hunkering down and trying to grow the business as rapidly and as efficiently as possible in Puerto Rico. And of course, if we ever start to think seriously about entering mainland US, obviously we do that at the appropriate time to shareholders and investors. And likewise for the rest of the Spanish-speaking territories that we know that Accrescent would have had a footprint in before, and the one that would perhaps want to look at given the new market dynamics. So to answer your question directly, at this present moment, anything is possible, but we are not focused on that at the moment. The next 2 or so years, we want to really be a massive player inside Puerto Rico.
So what you've done is given yourself flexibility to pursue multiple strategies based on now where you're positioned in the landscape.
Absolutely correct. That's it. You hit the nail on the head.
So based on the plans that you've stated in terms of first year investment strategy, and now with that recent acquisition, talk to us how the preference shares tie into that overall strategy that you have, and what makes you think that now is a good time for it.
Excellent. So again, I'm gonna give some background, right? Because background is very important. So private credit companies actually started around 1984. They're around in the US, and the formal name for them in the US is Business Development Corporation or Business Development Companies. And that came about when Congress was trying to stimulate the financial industry to actually deploy capital into the economy, specifically towards what you call middle market companies. In the US, middle market companies normally have revenues of like 50 million US, right? In our neck of the woods, that's a big company. So, and the reason for that was that banks were reticent to lend to these smaller type companies, simply because maybe the returns weren't there, or the appetite just wasn't there at the time. So if I fast forward from that, effectively, you know, because this was born out of a period when economic environment was not very good. Business development companies or private credit companies, in the case of SCI, their business model revolve around two basic fundamental things. Number one is to have very flexible and innovative financing solutions. So anything, any type of financing that is required, that is a debt focused financing facility, we can structure it and bring it to life. So we can use a blank sheet of paper and create a solution for a company that aligns with what they try to do, versus, let's say, traditional financing, which is a black box, and you either fit in the black box or you don't fit in, right? So creativity and customization is the hallmark of private credit firms. And the second thing is that private credit companies are not use very small amount of leverage, meaning they normally are not, they themselves don't use a lot of debt. So if you think of a bank will have $100 in equity capital, and then it will lend out that money 10 times. So, with that $100, it can lend out, let's say, $1,000, right? While a private credit company will have $100, and basically its balance sheet is like $200, so like 2 times. And so because a private credit company has used very low levels of leverage, that means that it has tremendous flexibility during periods of economic shocks, because it is unlikely that it will suffer any serious setback that will destroy its balance sheet and therefore its capital, right? So that's the first thing. And the second thing, during times of crisis or economic turmoil, etc., that is the time when middle market or medium-sized firms need flexible capital the most. Everything about COVID, which of course SCI would have gone through, that's the period when companies need flexible capital. You need capital that is going to satisfy your investment thesis or any challenge that you're having. And so because of these two fundamental things, SCI is very well positioned to navigate any type of market environment. So having set that backdrop, I mean, SCI is really looking at a period where the demand for private flexible capital and private credit is going through the roof. Why? Because there are many companies that are looking to do acquisitions. So there's a lot of acquisition financing appetite, right? Jamaica, of course, would have gotten upgraded, and before Jamaica got upgraded, everyone knew that Jamaica was on a very stable path because our debt ratios were falling. We were at 145% of GDP. I mean, 2012, 2013, 2011. We are now in the 70s, mid 70s, right? So that's a massive reduction. So that means that people are now looking to set up different types of businesses, or strong companies are acquiring their weaker partners to get bigger market share. And when you're doing acquisition financing, that requires a flexible type of financing, which includes private credit. And so the demand for flexible debt capital is, I would say, if you look in the world, in the US, Canada, Europe, it's going through the roof. And the same thing we are seeing in the Caribbean, even though the Caribbean private credit industry is very, very tiny, very, very small as a percentage of, for example, the bank market or the bond market. So when we look out on the horizon, we see tremendous opportunities for SCI. And because of these opportunities, what we have devised are different strategies. So one of the strategies that we have is that in Jamaica, we have a pipeline of about 75 million US or thereabouts, and we are therefore raising the pref share to satisfy some of that demand. Of course, the pref share won't be enough, and so simultaneously we are raising capital from other sources external to Jamaica, and we are in various discussions with those partners. I'm going through various forms of due diligence, which will take quite a while, because we're still a very young firm, to complement the pref share. So really and truly, this pref share is really and truly just focused pretty much on the huge pipeline that we have from Jamaican businesses and Jamaican entrepreneurs. And I said before, we need additional capital on top of that to complement the execution of those local opportunities. And of course, we have opportunities outside of Jamaica where we are seeking external capital to finance. So that's the primary reason why we have the pressure at this time, is that, okay, we're in the perfect environment where, yes, you have issues around slowdown in growth, high inflation, high interest rates. But when we look over the next 2-3 years, across the Caribbean and Jamaica in particular, we see tremendous opportunities for deploying flexible capital to businesses that are growing and expanding and need flexible capital to meet them. So that's pretty much what has triggered our need to raise capital at this time. And if you look at our balance sheet, pretty much we have deployed out all the capital that we had, or the dry powder. And so obviously the next step is to take new capital in, deploy that out, and keep repeating the same cycle every couple of years.
A lot of things I got from what you just said. Interesting. So based on what you're saying, and you can let me know if I've gotten it right, you have a pipeline that is such that even the preference share won't be able to meet the demand. So simultaneously, you're seeking to raise funds outside of Jamaica that will help to supplement the overall demand that you have. And at the same time, that gives the opportunity to at least take advantage of some of the opportunities immediately, because this preference share offer closes on December 6th. So if we assume that you're able to raise all of that capital, you're able to at least set those things in motion while saying, well, we need even more capital to fully grow the company in the way that you're seeing the opportunities in the landscape currently.
That is correct.
Okay.
Spot on.
So I do have a question. Well, two that came to mind. One, are you concerned with being able to raise the entire amount that you're seeking to raise? Because I get the impression that it's not a lot of money based on what you're hoping for, but in our landscape, we haven't seen much raises being done this year, especially. I mean, a lot of things go into that, but are you confident that you'll be able to get that from the market? And the following part of it is, if it is that you are not able to raise enough, will you extend the offer, or is it just that you'll focus your efforts on your other raise?
Good question. So let me answer the last question first. I'm not harboring any concern about not raising the capital. Right? I'm fully confident. We did our market read, and we would have also, I guess you could say, have perfect timing. So there's a lot of liquidity in the market at the moment, so I'm not really concerned about not being able to raise the capital. The first part of the question around whether or not we believe will raise, or you haven't seen a lot of capital raises in recent time, and do I have concerns? To be honest, the way this offer is structured is a preference share, and it has, I would say, at 8.5% in USD for 3 years, and 8% for a 2-year note, and then for the Jamaican dollar for 10%. I think those are kind of the best rates that one could get if you're an investor looking for a consistent stream of income that will come in, based on the frequency of the dividend payments of the quarter. So we don't think that there's anything out there in the market at the moment that will compete with what we are offering, and so that's why we're not harboring any. We don't think that there will be an issue. From my point of view, where I stand, to get investment, because SCI is actually rated investment grade, which means when you look at credit rating agencies that basically have a scale where they do an assessment of your firm and then rank it relative to other firms, and you have a rating scale which is, you have different letters. So closer you are to A, the higher your credit quality, which means that the likelihood that if you invest your money, you will get back your principal and your interest payments. And we are currently rated triple B plus on the Jamaican rating scale, and triple B minus on the Caribbean rating scale, which involves a wider pool of companies across the Caribbean region, and we have a stable outlook. And based on the fact that SCI would have, returned in dividends to its ordinary shareholders $11.9 million since October 2018, when it made its very first dividend payment, has never missed a dividend payment, and it would have also, for I think just under $5 million of preference shareholders dividends that would have paid out, and then for bondholders, we have never missed a dividend payment. The type of business that we have is we are financing companies, and we generate cash from those financing that we do. So we are receiving cash pretty much almost every day from all of these companies. So unless we blow up the entire business over the next 2 to 3 years, the chance of us not being able to make good in terms of return to the shareholders is, in my view, pretty low. Of course, I would, advise everyone to get the advice from their financial advisor, because I'm not giving financial advice. So I'm just saying, because of all of these factors and the timing, we are coming at a time when people would have perhaps gotten repaid from certain bonds in the market. Then I think that the offer will do exceedingly well.
Interesting. I thank you for that. So let's talk a little bit about, so you mentioned with great, you mentioned the fact that you've been able to consistently pay dividends. It's been something that you're known for. How will you measure, so you get all this money in, how will you measure success of that capital being deployed going forward? And know the focus is, of course, getting cash flow so you can return that to shareholders. But what are you measuring in terms of KPIs as the business continues to grow?
Good question. So, I would have represented to the ordinary shareholders and many conference calls that we are targeting a 10% return on average equity, which really means, when we take $1 and we deploy it, we expect kind of a 10% return after you take out all of the expenses, etc., over time. And that's really our focus at the moment. We are kind of in high single digits, and we are pushing aggressively to get that level of return up. Of course, that won't really affect the preference shareholders, because they're getting a fixed rate of return of 8.5% for 3 years, 8% for 2 years, and in USD, and for Jamaican dollars 10%. But that's what we really is the kind of one of the KPI. Of course, we also looking at dividend yield, which is also, this is for those who are ordinary shareholders now. We are trying to get that dividend yield in USD to always remain above 5%. I think on average over the past couple of years since we founded the company, dividend yield would have been there or thereabouts on a 5%, and we are trying to get that level up by generating more profitability, and then be able to pay back our shareholders more dividends. Of course, why this is important for the preference shareholders is that if we are paying out dividends to ordinary shareholders, then clearly we have excess cash to pay the preference shareholders their dividends as well, right? So the third thing is, ensuring that we don't have a lot of defaults. And even if there's a default, we are able to get back that money at some point in the future. So, our non-performing investment ratio, which is currently under 1%, which is a tad bit low, and low is good actually, by the way, but it's a bit low for a private credit company. So it's just ensuring that we remain steadfastly focused on credit risk management, because that's the business that we are in. We are taking on risk in terms of deploying the capital. We need to get it back. Deploying the capital, we need to get a fair rate of return on our investments. Of course, we're in a high interest rate environment now, so rates are a bit higher, but our medium term crystal ball look is that rates are gonna trend back down gradually over the next, I would say, two years or so, and so we are prepared for that. So I mean, we have gone through one of the toughest environments in the history of mankind, which is COVID. So I think we have developed a certain level of appreciation for maybe we have developed 100 years worth of appreciation for credit risk during a very tough economic environment. So at this moment, we are just hunkering down, ensuring that we are very diversified across different industries, different territories, trying to generate at least a 10% rate of return on the capital that we have, trying to ensure that we maintain a high dividend payout ratio for ordinary shareholders, which means if we are able to do that, it means that, hey, preference shareholders are going to be happy because there's no issue with their preferred dividends. And just keep focusing on risk management first, second, and third all the time, monitoring, having discussions with companies to see how they are faring, etc. So those are our general KPIs to ensure that we have success, and obviously, this will allow the company to grow and develop.
Do you see yourself being more or less conservative if things were different in terms of the interest rates, right? So based on where we've been over the last maybe 12 to 18 months, is this approach or strategy that you're taking now, I'm assuming that things would be different if interest rates weren't where they are right now? Is that something that you have thought about, or again, would it just be more of the same for you?
Yeah, it's a good question, right? So the way we think about private credit, it doesn't matter where interest rates are. If they are high, people need capital. If they are low, people still need capital, right? That's the bottom line. Businesses have to get access to capital to grow. So part of the challenge that we are trying to fix is providing access to capital to those who either don't have it or can't get it in the way that they want it. That's what we exist for. So if rates are high, hey, I mean, rates are high, but businesses must go on. And therefore, the only issue there is to the extent that we borrow money as well, right? Or we have investors that give us capital, and those investors expect a particular rate of return. We have to ensure that we maintain a particular spread. So this is just if I'm borrowing $10 at 8%, then if I'm investing that money, that same $10, I ensure that I need to invest that money at 8% plus, say, 5%, 13%, as a simple math. So if rates are lower and I can borrow money now at 5%, then what I want to do is ensure that, okay, 5% plus my 5% spread, that's 10%. So I'm investing at no less than 10%. So that's what I mean when I say it doesn't matter where rates are. What matters is, okay, does my outlook on certain industries, is it changing? So if rates are at 13%, then do I think that, let's say, manufacturing industry is a better industry to deploy my capital into versus, let's say, a distribution company. So that will change in terms of my industry shift, where I want to deploy the capital. But the actual deployment of capital itself, that won't shift. I just need to go and find where or which industries, which set of entrepreneurs have a more sustainable appetite for capital based on where the rates are. But it won't really change my outlook per se, because private credit firms, by their very nature, exist to solve problems, and part of that problem is access to capital. And when rates are higher, the access to capital is going to be less, right? It's going to be more difficult for you to access capital. So we are in that space to provide those solutions. If the market is getting a lot tougher, what we have to do is ensure that we are managing risk appropriately and maintaining that spread in terms of between our investment earned versus our investment cost.
Okay, interesting. So you're saying regardless of the climate, there are opportunities for you. What would change is the industries that you go after, and either way though, you're looking for something that will return more than you are returning to shareholders, essentially. So there'll always be something to ensure that you can run the business, right? Not everything can go
Correct.
out to shareholders in that way. All right, so we do have quite a bit of questions that have built up from those persons who are watching live. So we'll get through those questions. I really only have two more on my side, which speaks about the outlook of the company. So I think that's a perfect way to close out. So we'll go through as many of these as we can, considering that we have to wrap up shortly. So TY is asking, why is Accrescent not fully consolidated into Sygnus? And if planned to do so, what is the timeline for such action?
Excellent observation and good question, right? So the reason why it's not consolidated is basically accounting rules. So there are 3 different tests that you have to meet to consolidate. And Accrescent would have, quote unquote, not met 2 of them. And so just based on the IFRS accounting rules, we can't consolidate the company. And therefore we have to basically utilize an independent valuation model to value what is the benefit that is accruing to shareholders every month from the investment that we have made into Accrescent. So that's the short answer, is that it doesn't fit the IFRS accounting standards for consolidation.
So is it just a matter of time, or is something that you'll have to deal with?
No, unless the accounting laws change, it can't consolidate. So that's what I'm saying, that it just don't meet the 3 tests. 2 of them can't meet it, and that's not gonna happen unless accounting rules change. That's not gonna happen. It's gonna remain an unconsolidated entity. So it doesn't consolidate all the way up into SCI. So you're not gonna see its balance sheet and income statement directly passing to SCI, which, in a sense, in the future, could have tremendous benefits for SCI shareholders.
That's what I was thinking. And I think that's where TY might be thinking as well. That's why they asked. So, all right, Limit Breaker is asking, any plans to increase the frequency of share buybacks? Now, you did mention that on the earnings call, there was no purchase in the last quarter. So Limit Breaker is asking here, any plans to increase the frequency? And I guess just overall, where are you in terms of your share buyback plans?
These questions always comes up, right? So to answer the question forthright and frankly, we don't have any frequency with regards to share buyback, right? We just execute buyback whenever we feel the opportunity is right. So for example, when there is the type of liquidity that we are looking for to acquire shares, and among a couple of other things. So obviously, it's a very sensitive issue, because I obviously I don't want to have people front running SCI. At the end of the day, the share buyback is for the benefit of shareholders who remain with the company, not those who want to exit, right? Per se. So I don't have anything other than that to say. We could buy back shares tomorrow, or next week, or next month. It depends, and the internal metrics that we are utilizing to execute buyback for the benefit of shareholders.
So those funds for the share buyback is already allocated. It's something that, as you say, you could do it tomorrow. It's just really based on a criteria that you're looking for.
Yeah, so the share buyback capital is coming from the cash flow that companies is generating at the moment. So as I said, we can buy back shares tomorrow, next week, next month, in any amount, any quantum, up to, of course, the limits that we would have, declared to the market, so to speak. So there isn't we haven't communicated to the market any set plan. Obviously, we have our own internal plans, and those will remain private for as long as the share buyback plan remains in place.
Okay. I get the impression that that's what we'll get for now, which is fine.
Indeed.
Mon Sherry is asking, what does the name Sygnus mean? For any context that you could give her there.
Yeah, interesting question, right? So, one of the co-founders, Dr. Ike Johnson, aka Dr. J, right? So, back when we were at another firm, he and I, right, and we crafted the name. We were looking for a name to start a company, and we wanted the company to be like the employees to be like a group of individuals who are the best at what they do. And so we started calling for names, and we found CYGNUS, right? And CYGNUS means a galaxy of stars. But when we look at, if you try to use CYGNUS as a name and a logo, Ike said it didn't look sexy enough, so he changed the C to S. And of course, when we Google what SYGNUS meant, it didn't really have any meaning. Of course, there are a couple of other companies that have SYGNUS before us. So we just decided that name is a unique name because it ties into our objectives for what we want the company to represent. And even though the meaning is really from CYGNUS, we felt like change the C and have SYGNUS, and that would be a unique name. And the rest is, as they say, is history. And this would have happened, I think, in about 2007, when we would have, been elsewhere doing other things. Yeah.
I'll just say, for those who may not, it's hard to name a company. I'll just say, I went through quite a number. I have a full page of names that I went through before I settled on Learn, Grow, Invest. And so it's not just something that you wake up and you name it. So I appreciated the background that you gave us for that. It is a unique name, which I think bodes well for the company, because it's not going to be confused with another company, right? There's only one Sygnus. So that's good to know. Simone says she appreciates the simple language with which you use to convey points. I do agree with Simone. Next question from Limit Breaker. Are you planning to do any more APOs?
At this moment, no. Short and sweet.
All right. Omni3460 is asking, are there any plans to acquire a microcredit finance company in Jamaica?
All right, so we have strategists among among us. It's a good, excellent question, right? How should I answer this question? So at this very present moment that I'm speaking to you, there are no such plans. But obviously, you know, SCI is a company that is growing and expanding, and anything that falls within our overarching investment strategy of taking our equity capital, our total capital, and deploying it in a manner that provides access to capital for firms that don't have that access, then it's something that could occur. But if we were to do so, we would only do so if we were using, for example, a technology platform to do it, right? To really generate the economies of scale and be extremely efficient at it. So at the present moment, there are no plans, but I'm not ruling it out completely. But the only way that I would see that occurring in the future, more than likely, if it were to occur, is if it was for example, a technology platform. But at the moment, to answer your question directly, just so that there's no ambiguity, the answer at this moment, there are no such plans at present. But anything is possible.
Oh, I know. Okay, fair enough. All right, so next question is, how is Sygnus planning to return value to shareholders who bought into the IPO and/or APO and are still currently in a loss position?
So excellent observation and good question. So those who bought in the IPO and APO own equity shares, and we have been paying what I consider to be very consistent and what I would consider high dividends relative to if you were to look at all the other companies and listed on the Jamaica stock market. And people may be down now on the price of the stock, but Rome wasn't built in a day. And so as I would have outlined before, our strategy is to increase the growth of the company, to increase the earnings per share, get ROE up to double digits, increase the actual dividend payout. And of course, we have done the acquisition in Puerto Rico. We are currently now re-strategizing, and as of July 1st, acquisition would have been fully integrated into SCI, meaning how the manager operates, the team from Puerto Rico and the team from St. Lucia and Jamaica, getting that integration, which is geared at growing the company and elevating the platform, as well as the fact that we are, negotiating with partners to raise capital from outside. What all of this really means for those shareholders who have been very patient in terms of stock price performance, is that as we go through time, additional value will be unlocked from SCI. Because if you think about the private credit firms in the US, if you go and look at any one of them, what you will see is that they have been able to generate 9, 10, 11% cash yield, meaning you buy the share today, you can collect 9, 10% in dividends, which is higher than any quality bond that you'll have out there, right? This is consistent. It's not like because we are in a whatever environment. That's one. And two, they have been able to increase their net asset value or the book value over time by growing it aggressively. So if you think about those firms who have been around for 20 odd years, 30 odd years in some instances, and the fact that we are just 6.5 years old, right? And we actually had a 3-year period, a 2-year period of COVID, which is a 100-year event or a 1,000-year event. So effectively, we have only had 4.5 years of normal times to go through, so to speak. Then if you project out, you can see that SCI, we're not trying to recreate the wheel. The wheel has already been created. What we're trying to do is to build a wheel for the Caribbean. And so my view on that is that as the company grows and expands and is able to, for example, write a check for 30 million US one time, 40, 50 million US one time. Of course, this is, in a couple of years from now, or maybe not so long from now. Then the company would obviously have scale. And once the company has substantial scale, that's when I suspect that, the patient shareholders who are paying dividends will see the benefit in the stock price performance. Notwithstanding the fact that, almost all financial company stocks are beaten down now because rates are high. But I'm just saying, financial markets have a way of 1 minute you see it, the next minute you don't, right? So I am a SCI shareholder myself, obviously, and nobody can get my shares from me. Obviously, I probably have more information than everybody else. But effectively, I'm just saying, if you look at what the US private credit companies have done and what they are doing, hey, we are, on the path of doing the same thing. The only difference is that we are doing it in the Caribbean region, and we are in the early innings of, expanding the industry and growing SCI. So that's all I can say for now. But hopefully, shareholders will remain with SCI, continue to collect their dividends, and hopefully I'll be able to come back on this platform one day and people are asking for shares and can't get it. Yeah.
That would definitely be interesting to have that
Yeah.
that conversation. So I'm gonna try to. A ton of more questions came in, but I'm gonna sift through what I think are questions that you have not answered, because some of what you've given us is context that hopefully would have addressed some of the questions that came in. So Troyan is asking, would you consider a dividend in specie of AFS to SCI shareholder?
Would I consider a dividend in specie? The short answer to that at the moment is no. And the reason why I'm saying no at the moment, look, when you acquire a company, right, there are a couple of things you have to ensure happen. First thing is, the thing that sinks most companies that do acquisition is that they don't get the culture mix right in the integration. Fortunately for us, Puerto Ricans have a similar culture to Jamaicans, and so that isn't going to be a massive issue for us. But there are multiple nodes of efficiency that we have to implement and partner with the management to get the company to expand. It's $100 billion economy we're talking about, and we need to get Accrescent's balance sheet to 300, 400, 500 million. We're nowhere close to that at the moment. So you have to be patient, right? Set the growth path and growth trajectory of the company on a trajectory that it becomes an autopilot after the next, say, 12, 18 months. Build relationships within the market. The name of Sygnus in Puerto Rico, nobody knows who Sygnus is, man. We're brand new. We have to build lots of relationships. Obviously, Accrescent has relationships, but we have to build multiple relationships. We need to build a lot of relationships with international investors who want to deploy capital into Puerto Rico. Of course, Puerto Rico has a tax advantage region for US citizens, right? You get to pay 4% tax based on certain criteria. So there are so many opportunities. I think that we acquire the firm at the perfect time, but that doesn't happen overnight, right? It's gonna take a lot of hard work and diligence and sleepless nights to strategize and push hard and get those things done. And then at the end of the day, shareholders will see those rewards based on the hard work that we put in every day. So because it's so early in the game, and because when I look at the growth trajectory of Accrescent, They have deployed 100 million plus in just 18 months since we did the acquisition. That is incredible statistic, man. Since the start of this year, they have originated $80 million, to now. They did 20 million in origination in the September quarter. So we are seeing, the green shoots of, okay, we acquired this firm. The firm is originating way faster than what SCI itself is doing. So at the moment, we want to allow the firm room to breathe and grow and expand and, put in new technology, hire new people, put in new risk management systems, building relationships. And then we can come back to shareholders and say, by the way, we have a special dividend of whatever, or we bump up the dividend, the regular dividend rate, and so forth and so on. So, we are patient investors, and our objective is just to ensure that we generate the return. So that's what we prefer to do at the moment.
All right, thank you for that. So Orion is asking, would you consider doing a stock split to make the stock more attractive to some retail investors from a nominal price standpoint?
Good questions. You know how many times I've been asked this question, and I've seen other companies do this. So maybe I would say it's not out of consideration. But I'm an old school guy, right? So stock splits don't increase the value of a company. The number of shares change, and the pricing change, right? So no value is being created by doing it. I understand very clearly that if the price is $1, people think it's cheaper, and then they may buy it and run up the stock price. But I'm really about, creating long-term value. I want the earnings to be, when you look at the earnings per share, you look at it last year, okay, it's 80 cents. You look at it this year, it's $2. And therefore, that's the reason why you're buying the stock, because you know that, okay, the growth in the earnings is tremendous, and we are paying tremendous dividends. And if we are buying back the shares at a period where the buyback becomes aggressive for obvious reasons, then that means that if you go and buy the shares of the firm, you're gonna make a very decent return. That's what I want to drive the company, versus people thinking that at 1 cent US or at $1 Jamaican, it's cheap. I'm not ruling it out, of course, but I'm just telling you how I view stock splits, and that probably is what's gonna govern my mentality towards it for the near term. If we think the shares are illiquid because people can't afford 13 Jamaican dollars or 10 US cents, then obviously we just take it to shareholders and get the vote on it and do it, right? But at the moment, I think the big thing for me is, hey, earnings, let's push that up. Return on equity, let's push it up. So when you look at the PE ratio, you're like, okay, this firm is trading at 5 times earnings and it's delivering record profit. The stock should be trading at 3 times what it is, and that's the reason why you're buying it. And that's how I think about investment for investors who are investing their pension money or their kids' education fund money or whatever, long term. Next 18 years, you have a 2-year-old, is buy some Sygnus shares and leave it, make it go and bubble up and appreciate in terms of the dividend where you get plus eventually stock price. That's how I'm thinking about it at the moment, which is why it's not at the front of my consideration to do a stock, but it's not out of the realm of possibility.
Okay, fair enough. So I'll ask you 2 more questions, and I'm apologizing in advance. We have 13 questions left unanswered. I'll take 2 that I think would be interesting to hear from you. And then for everyone watching, what I'll ask you to do is place your unanswered question in the comments, I'll screenshot those questions, send it to the Sygnus team, and maybe we can get a response for you that way, because we are pretty much out of time. So first question here is from Limit Breaker that says, given that the goal of the share buyback is to increase shareholder value, wouldn't it be better to purchase, for example, on a quarterly basis, or to increase the just purchase it more frequently? Would that would lead to a greater increase in the share price versus the current method that you mentioned, where you buy as the opportunity might present itself based on the criteria that you have?
Good question. So I take the point, but our strategy, we think, can also work. I mean, the problem with doing it quarterly like that is that investors will start front run you, and then you're basically just in a game where people just buy, shoot up the price, and then come back again, and they just rinse and they just keep doing this over and over. And so you have speculators who front run the share buyback, and in the end the price end up don't move, because when you run out of your 9 million or whatever we end up at, this stock price hasn't moved. It's not sustainable, because people were just interested in, okay, let me put in my order to sell, and then they buy, and then they sell, and you have people, same set of persons selling and buying, selling and buying. That's not what we're using shareholder capital to do. So I get the point that it may be so, but I'm not interested in facilitating speculators running in, get their money, and then use that same money and come back and buy again, and then front run me and just keep doing it over and over. Long-term investors wouldn't benefit from that. And the reason why I'm saying this is, we have indication that some of that, let me leave it at that.
Okay. So you're saying pretty much that your goal is to be able to fulfill the mandate for the share buyback in the first place, which is to ultimately return value in terms of the percentage ownership, and for those shareholders who are interested in being a part of the shareholding pool long term, and not necessarily those who are in it for something that may be able to grow the share price in the short term, but not in a sustainable way. And in that way, you may run out of capital sooner. So ultimately, the ones who are there afterwards don't end up owning an increased percentage of shares that was the goal of the buyback to begin with.
Well, the price, the value of the shares isn't reflected by the value of the amount of money that we spend in the buyback. So when the buyback is done, the share price need to reflect the fact that we bought back X amount on a sustainable trajectory. If I go and spend the money very fast now, without due care, I could run out of capital, because people just kept buying and selling, and they make all the money buying and selling, and the shareholders will remain. They are saying, hey, your share buyback, it didn't do anything. That's what I mean. So I don't want that to happen.
Okay.
Yeah.
Okay, I understand. All right. So another question from Tryon, and this is the last one we'll ask before I ask you to just paint a picture for us for the future of Sygnus. When will SCI be cross-listed on another exchange?
That's a deep question, right? So we have observed cross-listings across, I guess, Trinidad mainly. But, SCI is thinking very, very big. And any listing that's going to happen is going to happen on a major market somewhere, where major markets are trading. And obviously, I don't have any timeline around this, because we first need to get, SCI needs to be making 10, 15, 20 million in net profit before we start consider going on listing on major exchanges. and the Puerto Rico business need to be like a $500-400 million business. So combined, we're looking at let's say close to $1 billion business to go and list on main market. But any listing that's going to take place in terms of cross listing, I can tell you that whenever that time comes, it's big markets that we're talking about. So I don't think SCI is gonna list, for example, in the Trinidad market. It's gonna be a major market, and obviously either SCI itself or subsidiaries of SCI. Of course, SCI can have more than one subsidiary in the future. So that's the best way I can answer the question. There's no direct timeline at the moment, but whenever that time were to ever come, it would be a main market, one of those major exchanges in the world.
Okay. All right. So I do want you to close out with your vision of Sygnus for the medium to long term. But I did mention, and I don't know how it slipped me, Moncherie is asking here to explain the cumulative redeemable part of the preference share. I know that's one of the main reasons why we're here, so I'll ask you to allow us to get that response. And another question that we were asked is the percentage dividend that was announced, is that going to be pre-tax, or is that what persons can expect in terms of after tax comes out? So I'll ask you to explain the details of the preference share for those who may be interested.
So let me answer the last question first. In terms of the tax, SCI is a St. Lucian company, and there is double taxation treaty between St. Lucia and Jamaica, and SCI pays 1% tax in St. Lucia. So outside that, there's no additional tax that the pref shareholders are gonna pay. So in effect, you get 8.5%, then that's like you getting gross that up by 25%, and that's your true gross yield, right? So effectively it's a net yield that you're getting. So that's why I'm saying it's a very good opportunity, and that's why I'm not worried about it, getting the capital in from the offer. In terms of what redeemable, cumulative redeemable means, it means because of preference share, and preference shares have certain, I guess, governance structures. So because cumulative just means that if in the very low probability that we didn't pay the dividend, right, which ain't gonna happen, then whenever we announce the next dividend payment, we would need to pay both dividends at the same time. So if you miss a dividend and you get to the next dividend paying period, you have to still pay the dividend that was missed, because you do have non-cumulative redeemable pref shares where if the dividend is missed, you don't have to pay the missed dividend. So in this case, it's cumulative, which means all the dividends that are due to you, they are due, full stop. Of course, we'll be paying them on time and schedule. And the second thing is about redeemable. So it basically, in the simplest terms, is that we are going to buy back the preference shares from the shareholders, which means that we are going to redeem the paper and give you back your principal, and you no longer have the right to earn 8.5% in US, or 8% or 10%, as the case may be, depending on different pref share class. And we would have extinguished the pref share, and you get back your money, and we now have back full control of the earning capacity of the firm without that those liabilities to pay out the dividends. So that's it in its simplest term. It's cumulative, meaning all the dividends are due no matter when they pay, but our intention is we are paying all of them on time. And redeemable, meaning we are going to buy back the share from you, which is just a terminal that you use in a bond. The bond would have a maturity date, but because this is actually a form of share, but it rank above ordinary shareholders, then the terminology that is used is to say you're going to redeem it. So it's just terminology. That means I buy it back from the give back the principal.
Okay. All right. And the final question, which is from Elaine, and he's asking, give us, the road ahead for Sygnus up to the next 5 years.
So I would have said this many times before. The first thing that we are about in terms of road ahead, we are looking at $1 billion USD in transactions over the next, I would say, definitely in under 5 years. And if you were to translate what $1 billion in transactions mean, it means that the assets under management is going to be pretty huge. Clearly, we're going to have to have more than 500 million in assets under management if we're doing $1 billion. If we don't have a 500 million in assets under management, which means a very big base on which to increase dividends, etc., then it must mean that we are doing syndications, meaning we are perhaps participating in some multiple large transactions and sell them off, or some sort of activity, which means that we would generate large fees from facilitating large transactions, meaning we can underwrite a big deal, 30, 40, 50 million transactions all at once, which generate large upfront fees, which clearly changes the trajectory of SCI's fee income. And you would have seen already where we kind of started that process. You would have seen it in the annual financials where the fee income would have increased. It's not a big number, but the percentage increase would have been very big. And again, in the just released quarter results, the fee income again is growing at more than double year over year. So I'm saying that once we get that scale, the ability to generate large amount of fee income, which means that fee income can become 20-30% of overall total revenue, that means that earnings per share will jump, right? Because fee income is something that you get upfront cash. You don't have to wait 1 year to generate that fee income from net interest income. Over the next 5 years, obviously SCI will once we settle down on the current Puerto Rico asset, I would say more than likely, you shouldn't be surprised if you see SCI make additional moves in terms of additional companies that fit the mold of SCI in order to grow and expand its portfolio. And finally, SCI absolutely will be sponsoring or co-sponsor investment companies, investment funds that are focused on impact investing, focus on resilience, climate change, things that actually affect us in the Caribbean. Of course, by sponsoring those dedicated investment vehicles, SCI will be making additional monies for shareholders, but also it will be paying keen attention to ensuring that the environment that we live in, our children and grandchildren can enjoy it. Because I think this is one of the big focus that I would have hinted at during the last earnings call, that the Puerto Rico business has had 5 years of exceptional track record of deploying capital through impact investing, and I think that SCI you're gonna see a lot of stuff from SCI over the next 2 quarters in terms of new investment initiatives that we are going to be launching to enhance shareholder returns, to pay more dividends to investors, to grow the earnings per share, so that those questions about share price hopefully can dissipate. But I think the future is absolutely bright. I'm looking forward to most to that $1 billion of transactions, because the trust me, if we get that done in the next, say, 3 or so years, the earnings capacity at SCI will be substantially. There will be a structural change in the earnings capacity of SCI to the positive, to the upside.
All right, good stuff. I look forward to subsequent earnings calls. I was saying to Jason earlier that I do watch every single earnings call from Sygnus. It's become a sort of staple. I like to just see the trajectory and the growth of the company over the last few years. And so all the best with the preference share offer and all the best with future plans. I do look forward to hearing more about how things unfold. And so I do know that there are a lot of questions that we weren't able to answer. So again, I apologize to everyone that we weren't able to get to all of them. This is something that, as you can see, Jason, there are a lot of questions that our audience has for you. And so I will, as I said, take a screenshot of those questions, send them in, and at whatever point is convenient. Either we maybe host another session briefly, or we simply I'll do a video where I just share your responses with our audience. So I really do thank you for the time. I appreciate all the answers, the clarity you've given us. And for those who are concerned about how to apply for the offer, how that works, etc., we would have covered that in the other video, but briefly, it is available on JMMB's Moneyline platform. If you're a JMMB customer, if you're not a JMMB customer, they have said that you can apply through their new platform, Moneyline IPO. Your JCSD number from another broker will work. So if you're interested, you can be sure to go ahead and do your application that way. We did a prospectus review, but I do encourage you to read the prospectus for your own and be sure to speak with a licensed financial advisor. And then, of course, there's a lot of coverage on Sygnus's social media pages where you can get more information. And I imagine that as things progress, then the Sygnus team will keep everybody informed. So thank you so much again, Jason. It was a pleasure.
The pleasure was all mine, man. Thank you.
All right. So hopefully everyone got, well, for those who didn't, again, I apologize. Remember to post your questions in the comments. I'll get to them as soon as I can. Please watch the prospectus review in its entirety. We did answer a lot of the questions relating to the offer. I believe the only one that I didn't mention here tonight was someone was asking in our Telegram group if the offer will be listed. Yes, it will be. And if you are interested in just being a part of the conversations that we have daily about, investments and everything relating to the local and actually international stock market, I just shared the link to join our Telegram group. And so you'll be able to be a part of that discussion. And I will look for all of the questions and be sure to get those responses out to you as soon as possible. So I want to thank everyone for watching. I will take a screenshot now of all the ones that I'm seeing here in the chat, and then we'll just keep you posted on it. So I hope to see you for the next video. Take care.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N. Grow Invest.